In the rapid-fire world of enterprise technology, there are really only a select few companies that consistently redefine what's possible.
Yeah, that's true.
And today, we're pulling back the curtain on one of those giants, SAP. They just delivered some, well, truly remarkable numbers.
They certainly did.
So welcome, everyone. This is our deep dive into SAP's financial results for the second quarter of 2025. We're working directly from their official quarterly statement and the press release that came out.
Straight from the source.
Exactly. And our mission today, it's really to cut through all the corporate speak, the dense financial figures.
Get to what matters.
Right. We're here to help you understand what's really happening at SAP, what's driving this impressive performance, and maybe more importantly, what these trends could mean for businesses, maybe even yours.
We'll try to offer some clear insights, maybe a few surprising facts along the way.
Okay, so let's unpack this. SAP just announced, well, another quarter of pretty outstanding results. When you look at these numbers, especially in the cloud space, what immediately jumps out? What's the big story here?
Well, I think what's immediately striking is just how clearly these figures show SAP's strategic pivot, really working.
How so?
Take the current cloud backlog. Now, that's essentially future revenue, right? Already committed through contracts.
Okay.
It soared to $18.1 billion. That's a huge number. And it's up 22% year over year.
22%.
Or, and this is key, 28% if you adjust for currency fluctuations. We should probably call that underlying growth going forward. It gives a clearer picture.
Right. Strips out the currency noise. 28% underlying growth in backlog.
Exactly. And look, this isn't just like small incremental growth. It really points to a fundamental shift in their business model. They're moving strongly towards predictable, recurring cloud services.
That backlog definitely signals confidence for future revenue. But what about the cloud revenue they actually booked this quarter? Did it keep pace?
Oh, absolutely. Cloud revenue for Q2 was up a really strong 24%.
Right.
That's $5.13 billion.
Okay.
And again, the underlying growth, 28%. So really robust.
And within that cloud figure, any specific areas shining?
Definitely. Their cloud ERP suite revenue. Now, this covers their core SaaS and PaaS solutions.
Yeah.
Software as a service, platform as a service.
But like Rise with SAP, AI stuff, finance, HR, the core business applications.
Precisely. That was a real standout. It surged 30% to $4.42 billion. Underlying growth there was 34%.
34%. So the core cloud stuff is really firing on all cylinders then.
No question.
How did all that cloud strength translate to the company's overall financial health? Total revenue, profit?
Well, total revenue for the quarter climbed 9% to $9.03 billion. The underlying growth was 12%, so healthy growth overall.
Okay.
But what really highlights their operational strength, I think, is a non-IFRS operating profit.
Right, that's the figure that strips out some of the one-off items, gives a cleaner view of core earnings.
Exactly, and it saw a huge leap, up 32% to $2.57 billion.
What?
Underlying growth there was 35%. That's massive.
35% profit growth.
And maybe even more telling, look at free cash flow. That's the actual cash the business generates.
Yeah.
It increased by an incredible 83%. 83%. To $2.36 billion.
Okay, that kind of cash generation really speaks volumes about their financial discipline and, well, just health, doesn't it?
It absolutely does. It gives them huge capacity to invest, to navigate whatever comes next.
Yeah.
Very strong sign.
And it looks like they're building a more stable foundation, too. I saw a note about predictable revenue share increasing.
Yeah, good point. The share of their revenue that's considered predictable, mostly subscriptions, increased by 2 percentage points. It's now up to 86%.
86% predictable.
Right. And that's not just about financial stability for SAP, though it is that. It's also a strategic signal,
Yeah.
It shows their commitment to this subscription model.
And for customers, for you listening, what does that mean?
Well, it suggests a more reliable partner, less reliant on those big one-off software deals. It should mean more sustained innovation and support for their cloud offerings over the long haul.
Okay, so these aren't just big numbers floating in space. There's clearly a story here of strategic execution. What are the leaders saying about this? And what specific factors really fueled this strong performance?
Yeah, what's really insightful is that this isn't just, riding a market wave. It feels very much driven by a well-executed plan.
What did the CEO say?
Christian Klein, the CEO, he highlighted the outstanding results, naturally, but he specifically pointed to the role of AI.
Ah, AI, of course.
He mentioned AI innovations such as Joule becoming available everywhere and for everything, and also the SAP Business Data Cloud is a powerful accelerator of AI. He sees these as really strengthening their whole portfolio.
That phrase, everywhere and for everything for AI, that sounds ambitious. What does that likely mean in practice for a business using SAP?
Well, it's not just about having a separate AI tool, right? It implies AI being deeply embedded right into the core ERP processes.
So like automated finance tasks, predictive supply chain insights, self-optimizing HR workflows?
Exactly. Things happening within the core systems, not bolted on. It could genuinely change how businesses run their day-to-day operations, driving efficiency from the ground up. Klein clearly believes, and he said, enterprise operations are about to enter a new era, and SAP is best positioned to benefit.
That's a bold vision. What about the financial side? What did the CFO add?
Dominic Assam, the CFO, he echoed the positivity, called it a very good Q2. He pointed to the accelerating total revenue growth, strong profitability, and free cash flow.
And the drivers.
He put it down to two main things:
Right.
continued customer demand, so the market is pulling, and disciplined cost control.
Ah, cost control. So it's not just innovation driving profit, but also efficiency.
Absolutely. That combination seems to be their winning formula right now.
Yeah.
Cutting-edge tech coupled with really tight financial management.
So was it just general belt tightening, or were there specific operational improvements?
It seems quite specific. They explicitly mentioned that the strong operating profit growth benefited significantly from operational efficiencies realized through successful execution of the 2024 transformation program.
Ah, right, that big restructuring program they announced before. That must have had upfront costs.
It did, yeah. Significant expenses earlier. But now, it seems those changes are delivering real efficiency gains that drop straight to the profit line. You see it in the numbers. Restructuring expenses were down by 0.6 billion compared to Q2 last year.
Okay, so that's a big factor.
Yeah.
Any other tailwinds?
They mentioned a few others. Lower share-based compensation costs, positive trends in working capital, also lower restructuring payments specifically, and lower income tax payments too. So a combination of factors, but that transformation program delivering seems key.
It really shows how that mix of forward-looking AI innovation and just solid financial discipline can work together.
Definitely pays off.
Okay, so we've seen the big picture, the strong cloud growth, the profit drivers. But what does this actually mean for companies using SAP or thinking about it? And are there any parts of the business showing, let's say, different dynamics? It can't all be up and to the right, can it?
No, exactly. And looking at the nuances is important. It's not just about the headline growth. It's about where that growth is coming from, and maybe just as importantly, where it isn't.
We know SaaS and PaaS are strong. Where are things perhaps slowing down or declining?
Well, this really underlines that strategic shift we talked about. On the flip side of the booming cloud numbers, you see the legacy parts of the business contracting.
Like traditional software licenses.
Exactly. Software licenses revenue was down 15% this quarter to P219 billion. Services revenue also saw a dip, down 5% to 1.06 billion.
And I think I saw IS, infrastructure as a service, was down quite a bit too.
Yeah, that was down 37%. Now look, this isn't necessarily a red flag.
Right, it's expected if they're pushing everyone to cloud.
Precisely. It explicitly shows their business model is actively shifting. Those traditional on-premise sales and maybe some related services are declining because cloud adoption is accelerating. It looks like a managed transition, really.
That makes sense. So despite that shift away from licenses, they're still seeing strong uptake of their main cloud transformation offering, Rise with SAP.
Absolutely. They highlighted continued global adoption for those big end-to-end business transformations.
Can you give us a flavor of who's using it? What kind of transformations are we talking about?
Well, they mentioned some really interesting names, like the Mercedes-AMG Petronas Formula One team.
Formula One, that must be incredibly demanding, data-wise.
Hugely demanding. Real-time data, super high performance, every millisecond counts. It shows Rise can handle those kinds of intense environments. It's not just a technical upgrade for them, it's about streamlining their whole operation to cope with the speed and data demands of competitive racing.
That's a powerful example. Who else?
Other big names mentioned were Alibaba Group, GSK, the pharmaceutical giant, and even the University Medical Center of Johannes Gutenberg University Mainz in Germany. So diverse industries.
And some companies actually went live on S/4HANA Cloud this quarter too.
Yeah, they mentioned Biel City Administration in Switzerland and Sinarmas Mining as examples of go-lives.
So Rise is for the big transformations. What about companies maybe looking for a quicker path to cloud ERP? Is there something for them?
Yes, that's where Grow That SAP comes in. It's designed for, let's say, faster, more standardized cloud ERP adoption.
More pre-configured, maybe?
Kind of, yeah, aimed at companies needing quicker deployment. And they're seeing traction there, too, naming customers like PwC and EGI, a fitness tech company.
Okay, so options for different speeds and scales.
Exactly. And beyond those specific Rise and Grow programs, they also listed key wins across their wider portfolio. Companies like BMW Group, the German Armed Forces, L'Oreal, Zurich Cantonal Bank. It really shows the breadth of their reach.
It certainly paints a picture of an adaptable strategy, catering to different needs globally. And geographically, where did they say the cloud momentum was strongest?
Performance was particularly strong in APJ, Asia Pacific, Japan, and EMEA, Europe, Middle East, Africa. Solid in the Americas, too.
Any specific countries stand out?
They called out outstanding performance in Brazil, Chile, France, India, Italy, South Korea, and Spain. And particularly strong performance in places like Canada, China, Germany, Japan, and the US. So really broad-based strength.
Okay, let's shift gears and look forward. What strategic moves are shaping SAP's future, and what's their outlook for the rest of 2025? It's not just about Q2, it's about setting the stage, isn't it?
Absolutely. And what's interesting here is how they seem to be balancing those ambitious growth targets we saw with a pretty pragmatic view of the wider world geopolitics, macroeconomics, especially those currency headwinds.
First things first, leadership seems stable.
Very stable. They made a point of noting the extended contracts for CEO Christian Klein. He's signed on until April 2030.
Wow, that's a long commitment.
It is. And CFO Dominic Assam is extended until March 2028. That signals real continuity and, you assume, confidence from the board in their strategic direction.
And strategy-wise, they seem to be leaning heavily on partnerships.
Very much so. They announced some significant new collaborations or extensions of existing ones.
Like?
Well, one with Accenture. That's focused on enabling connected intelligence across the enterprise, using AI. It sounds like combining SAP's business process knowledge with Accenture's integration skills to deliver AI-powered insights.
Makes sense. Any others?
A notable one with Palantir. The aim there is to facilitate joint customers' cloud migration journey and modernization programs.
Palantir.
Yeah.
They're big in data integration and AI platforms, right?
Yeah.
Ontology and AIP.
Exactly. The idea seems to be connecting SAP's business data cloud with Palantir's tech to help businesses get a unified view of their data and then apply AI effectively, like building that digital blueprint of the business you mentioned earlier.
Okay. And another one in Asia.
Yeah, a strategic partnership with Alibaba Group focused specifically on accelerating cloud transformation in that region.
So these partnerships are clearly about broadening their ecosystem, extending their reach, particularly around AI and cloud.
Precisely. It reinforces that core strategy.
And financially, they seem confident enough to keep buying back shares.
They do. That ongoing 5 billion share repurchase program is still active. They have already executed about 4.6 billion of it as of the end of June.
That signals pretty robust financial health and management confidence, doesn't it?
Usually does, yes.
Yeah.
And maybe the biggest signal of confidence, despite all the external uncertainty, is that their financial outlook for the full year 2025 remains unchanged.
Ah, okay. That's a strong statement in itself. What are those targets again for the full year?
They're still expecting cloud revenue between 21.6 and 21.9 billion. That's 26% to 28% underlying growth.
Still very strong growth.
Very strong. Non-IFRS operating profit target is 10.3 to 10.6 billion. That's 26% to 30% underlying growth. And free cash flow expected around 8.0 billion for the year.
But the CFO struck a cautiously optimistic tone, you said. What were the caveats?
The main one is currency exchange rates. They explicitly expect fluctuations to have a negative impact. For instance, they estimate about a 3.5 percentage point drag on cloud revenue growth just from currency effects for the full year.
Okay, so they're baking that headwind into the unchanged guidance. That shows some pragmatism.
Exactly. Balancing the strong underlying performance with a realistic view of those external factors they can't control.
And it's not purely financial goals they're tracking, right? They mentioned some non-financial targets.
That's right. They also have targets for 2025 around things like their Business Health Culture Index, aiming for 80 to 82%.
What does that measure, roughly?
It's sort of an internal measure of organizational health, leadership trust, things like that. They also have a target for Customer Net Promoter Score, or NPS, between 12 and 16.
Measuring customer loyalty.
Yep. And employee engagement, targeting 74 to 78%. Plus, they anticipate steadily decreasing carbon emissions. So it shows a broader focus on sustainability and internal health, not just the bottom line.
Okay, so summing up then, we've definitely seen SAP deliver a Well, a powerful Q2. It feels fueled by that really robust cloud growth, clearly strategic AI innovations, and some strong operational efficiencies kicking in.
Yeah, it really looks like a company firmly pivoting and successfully pivoting towards the future of enterprise tech. Cloud and AI are clearly the engines now.
So, thinking about that future, as SAP keeps emphasizing AI becoming everywhere and for everything, like Christian Klein said, and this idea that enterprise operations are entering a new era, how do you, listening right now, see these trends impacting your own industry or maybe your own approach to technology adoption in the years ahead?
Yeah, what new possibilities does this open up? Or maybe what new challenges might it bring for you and your business? Something to think about.